Someone is sitting in the shade today because someone planted a tree a long time ago. In other words, one of the best things that we can give our children is a savings vehicle that will grow with them over the years, helping ensure a successful future in today's fast-changing world. As a way of introduction, my name is Christian Gutierrez. I am a senior advisor here at the Financial Architects. And in this short video, I'm going to show you the most powerful and least known savings vehicle for kids on the market. The truth is, many parents aren't saving enough money or any money for their kids' future. And many of the options that are available either have little to no growth or are extremely restricted in what the savings can be used for, limiting their child's future. Imagine looking your child in the eyes at their high school graduation and having to tell them that you have nothing saved for them. Just think of the amount of guilt you will feel as a parent knowing that you could have done more for your child. In order to help our children ensure a successful future in today's fast-changing world, we would need a savings vehicle that will grow with them over the years, that is affordable, non-restrictive, and has maximum growth potential with no risk of loss. Juvenile Index Universal Life, or Juvenile IUL, is that savings vehicle. It's a cash value savings account built on a financial chassis of permanent life insurance. There are three things that you need to know before making it a part of your child's future. Number one, it's indexed with the S&P 500, which is made of the 500 largest US publicly traded companies like Amazon, Facebook, and Apple. Now, when the S&P 500 goes up, your cash value within your savings account goes up with it up to 10%. But when it drops, your principal and any gains you have earned the prior year get locked in. So let's say your child was born in the year 2000 and you put away $10,000 away for them and you didn't touch it until they turned 20 years old or until the year 2020. If you had a traditional savings account earning a whopping 0.5% each year, it would have barely grown to $11,049. If you had a variable savings plan, which rides the full ups and downs of the S&P 500, it would have grown to $28,446. But you would have experienced three losses, two of those losses being major. If you had a juvenile IUL, your principal and any gains you had earned within the prior year would have been protected from any loss. And it would have grown to $32,278, more than tripling your initial amount. Talk about maximum growth with no risk of loss, right? Number two, it's flexible. This is actually one of the main reasons why so many parents love juvenile IULs. Other financial vehicles simply lock you in to what you can use your savings on. But a juvenile IUL can be a down payment for their first car so that they don't depend on unreliable transportation, paying for college or a trade school so that they aren't buried in student loan debt, startup capital for a business so that they aren't trapped in the 9-to-5 rat race, a down payment for their first home so that they can start building equity for themselves and not a landlord. Juvenile IUL cash value can be used however, whenever, on whatever you choose. Number three, since it's built on a financial chassis of permanent life insurance, your child is covered with hundreds of thousands of dollars of permanent life insurance with living benefit. Meaning, God forbid, your child would have a terminal illness, chronic illness, critical illness, or a critical injury. You could actually pull money out of the death benefit so that you can cover the cost of medical bills or cover the cost of living so that you can leave work for a while to attend to your child's needs. You can do all this without touching any of the cash value. And the fact that it's built on a financial chassis of life insurance means you get extra perks, like your cash value growing tax-deferred, not having to pay any taxes when you withdraw the money via loans, it being protected from any lawsuit. It's also not considered an asset calculation when applying for student loans for college. As a matter of fact, your cash is more secure in an account that's being held by a life insurance company than an account being held by a bank, because life insurance companies have ginormous cash reserves. They're required to have at least $4 backing every single dollar that you have in that account, while banks can loan out up to $9 for every dollar you have with them. So if you want to ensure a successful future for your child through a savings vehicle that is affordable, non-restrictive, and has a maximum growth potential with no risk of loss, then give us a call at 888-350-5396 or email us at info@tfainsuranceadvisors.com. I'm sure you're curious to know what one of these savings vehicles could look like for your child. Let's say you had a baby today and you immediately started putting away $100 a month into a juvenile IUL. Right away, your child is covered with $250,000 of permanent life insurance with living benefits. By the time they're 20 years old, they would have around $35,000. By 26 years old, they would have around $57,000. By 35 years old, they would have over $100,000. And if they don't access that money right around retirement, their IUL is conservatively projected to hit over $785,000 of cash value. And at age 65, they can turn on a tax-free income stream of about $55,000 per year that will last them the rest of their lives, no matter how long they live. The point here is that they have options. Juvenile IULs are affordable, non-restrictive, and have maximum growth potential with no risk of loss, making them one of the best savings vehicles that will help ensure a successful future for your child.